Hello and welcome to KYC. I am Sharad Dubey and the company on KYC's radar today is Greenpanel Industries. It's an MDF player. But the question remains is why have we taken this company? This sector has been beaten down over the last 2 to 3 odd years. Is there a scope of turnaround? Let's see what are the important questions which I would like to know about this company for our segment. Is the worst over for the industry? There was a big pressure coming over the last 2 to 3 odd years, and why it was coming? That's our second question. That is, have the cheaper Chinese imports which had flooded the Indian markets, are they still impacting the MDF industry or not? That's our second question, why we are getting this company here. Also, will the company's operating leverage drive higher margins going ahead? Because if the worst is over then, and what would be the growth outlook for the company going ahead, especially when they are having their largest expansion plans coming in Andhra Pradesh. Lastly, one more question we'll be asking is the volume growth pickup. Will we see that, and will that be maintained double-digit growth in H2 FY26? So these are the important questions, is why we have got Greenpanel Industries to our segment in the KYC. But let's look at how the company is, what the company is all about. We have spoken about why the company should come here. But what's the company all about? The company is India's largest MDF manufacturer and one of Asia's largest players as well. Now, when I speak about MDF, it's nothing but your medium density fiber board. When there is a wood, there's a lot of furnishings which happen, and then they put it in different layers and they use it across the furniture segment. Their capacity, that's also very much important. There are two capacities they are operating in. One is your MDF. Another is plywood. Plywood is an older version. You have keep on stacking more plywoods and get a thicker version. That's called an MDF, to put it simply. And they're also having a 9 million SQM plywood capacity as well, which we'll be looking at these numbers. Look at the numbers, 1753 dealers and 7 countries, companies having exports also. Interestingly, out of total MDF exports, 40 to 50% comes only from this company. Revenue breakup, if you look at it, 90% of that is skewed towards the MDF segment and only 10% comes from plywood. That is why the company is not having a direct peer-to-peer to have an important comparison bit. But what is the MDF used for? Furnitures, doors and even wall paneling is something where the various use cases come in. But of course, we have spoken about the company, why we want to get the company, but let's just discuss why it's important that we will be getting the ratings in for the company as well. Let's get out the ratings, what's important, income statement, balance sheet, cash flow, return ratio. These are the financial numbers which we will be looking at. And also, apart from that, if you look at it, there is shareholding, street cred, which is nothing but your share returns, and also valuations currently with its 5-year averages and the outlook going ahead, and that's very much important. So let's start. The first one, of course, is the income statement here. Look at the numbers for FY22 to FY25. There has been a drag in the numbers, no growth coming in, and I had spoken earlier that the industry is plagued by Chinese imports and even local players coming in the MDF segment. That's where the competition came. So there was no major consolidation happening in the top line numbers as well. And look at this, all across the numbers were dismal. So overall, it will be a thumbs down when it comes to the income statement going ahead. Also, let's look at the balance sheet. That's also something to look at. The key metric values, borrowings, that has gone up from 296 crore, you see that has jumped to 413 crore rupees. So that's a concern as well. This is happening, of course, on the long-term borrowing front. But do remember, company is doing a major capex as well. So that might be a reason for the company doing these financial transactions. But the cash and bank balance, that has been going down from FY23, the number was 356, it's down to 105 odd crore rupees. So from balance sheet perspective also, I'm giving a thumbs down to the company, nothing much happening. And of course, when the financials are showing some concerns, then we should also look at the cash flows to actually see where the entire picture is coming for the company. The PAT numbers, you see, it's reduced in FY25. And the cash flow from operations to PAT, however, if you look at it, it is still decent. It's 108%. Whenever this definition comes of almost 100 odd %, then we can see that there is some decency here as well. Net cash flows, not much to see. There is volatility here. But because of a decent cash flow from operations to PAT ratio, I'm giving a neutral rating to the cash flows. Now let's look at the return ratios. That's also pretty much interesting, and it's all on the downside. there is like a looking like a staircase. It was earlier almost 28.7%, now it's down to 4% return on capital employed. Return on net worth also, there's the same story repeating here as well. So significant value erosion coming in for the stakeholders. So the question is the worst over for this company? Is the worst over for the industry? That is what we'll be looking at. But net, if you give the numbers right now, return ratios will also be a thumbs down. So out of the last 4 ratios we have given, the performance has not been strong, but will the other ratings give something reprieve the company? That's something which we'll be watching for. And of course, we will be looking at the shareholding. That's the 5th criteria. Over here, largely we see the promoter shareholding that has been stable at 53 odd percent, and DIs has increased this stake. That's very interesting, from 21% to 30 odd percent. So in market parlance, we call them value buying, and the institutions are taking positions in this. And because of that, I would be giving a thumbs up for that. That means a +1 point comes in its ratings raise. Let's look at the street cred, the returns which have come to the shareholders. 5 years returns has been decent to 26 odd percent, but 1 month it's down 15%. A year to date it's down 30 odd percent, and even 1 year basis it's down 19%. That means for the medium term shareholders or even a decent 1 year shareholder, that nothing has come to the investor's pocket. So that's why that's a key concern area coming in, and because of that, I would be giving the street cred a negative point, or I could say a thumbs down. Also, let's look at an important criteria, and this is your valuations front. And valuations 12-month forward P, which we have taken, is just 7.3 times. Now compare that with the 5-year average P, that comes at 17.3 times. That means to the average valuations, if we compare the company, it is more than 50% it's trading at its discount. That means the valuations are favorable for this company. Because of that, I will be giving a positive thumbs up for the company. And lastly, let's look at outlook. That's our 8th and final parameter where we judge our company in KYC. And over here, that is something which is very important. The recently company came out with its numbers as well, and they have stated that the MDF industry outlook, that's expected to improve after 2 to 3 years. That means the down cycle which is there, it is bottoming out. That's a very important commentary coming, and the company, remember, is a market leader in the MDF space. Also, the company is expected to focus on regaining its market share. The company's market share was roughly 22 odd percent in the organized space and the March numbers, but now that will be very interesting how the company regains its market share. And also the cheaper Chinese imports and smaller players, that overhang is also done, and now the large players are trying to get back their market share. Also, lastly, what are the expansion timelines, and is the Andhra Pradesh plant expansion online or not? That's something which the outlook will be looking like, and the management has stated that they will be going live in the near future. So net from that perspective, the outlook, we can say, remains strong for the Andhra Pradesh plant. But let's revise the ratings, how the ratings has actually panned out, and I will slowly explain you what's the information looking like. And over here, of course, the first 4 parameters, a sea of red coming in, and because of the industry downturn, most of the numbers are there. Income statement, the CAGR numbers going in, and even the balance sheet in the red. But shareholding, that's been decent. DIs have been lapping as a value buy. Street cred, not much because of shareholding returns, but valuation very cheaper. 50% downtick coming in from the 5-year averages. Outlook, after a long time, turnaround statements have started coming. Companies focusing in margins, volume growth. So net, current and future, I am adding both. It's 3.5 out of 8. There is a scope of growth here. And to understand what that scope of growth is, we will be joined by the management, and the management's name is Himanshu Jindal. He's the CFO at Greenpanel Industries. And of course, the first question is, a bullish commentary is coming from the company when it comes to the cost cutting and increasing operational efficiencies. What's the outlook for the margins going ahead?
So I think, Sharad, very clearly, I think we're out of the woods. I think, whatever was happening is behind us. Last 2.5 years, we lost market share to new entrants who were adding capacities. And there were cheaper imports coming in, substandard material. I think that's in the past. I think even at our own end, we are chasing volumes much more aggressively, whether by push or by pull. That's a very clear stated objective as of now. We're running our capacities at 55, 60% at best on real basis. I think so. There is a lot of headroom for growth, especially after this new line which has been commissioned recently. And as this line is progressing, I think we are seeing utilizations improve. We are seeing operational efficiencies, the way you mentioned, also come in and kick in. Yeah. So I think, going forward for this fiscal, I think the guidance is, after digesting the bad quarter one that we had, where we lost 15% volumes YOY. I think for the full year, a high teen sales growth is possible, which is what we think we are very optimistic on. And on the margin front, I think EBITDA high single digit to an early double digit is possible. This is what we are eyeing for. Let's see where we reach.
That's a pretty interesting take on the guidance front. And also, Himanshu, also you could share with us the expected market share which the company is aspiring now versus the current numbers, because it seems that the management is now, after a turn down, or you could say a downturn coming in the industry, now the volumes growth is also there and you're aggressive also going ahead. So what would be your aspiration here?
So see, the top 5, 6 players have a market share of roughly 60% by capacity. Our market share is 21, yeah, by capacity again. And that's something that we intend to maintain, right? Let's see, how things shape up.
That's pretty interesting on that, Himanshu. There seems a strong competition in this space. Are we looking at any hike in terms of price for the MDF segment?
See, at this point in time, there are no real pressures on pricing. I think, whatever were there in the past, we've taken corrective actions at our end. We've kind of realigned our pricing premiums with the relevant peers. What we are picking up now very clearly, with costs staying where they are, moving up, or being stable more or less. I think price increase at some point in time will play out, but not immediately. That's how I see it.
Interesting. Himanshu, the company recently stated in a management meet that the volume growth is expected to be in high teens for FY26. Now, what are the key demand drivers for this, and would this be outlook on the offtake as well?
The demand, fortunately for us, we are a rapidly growing sector. Yeah. I think the problems in the past were more related to supply, not demand. Demand has been fantastic. I think barring 1 or 2 quarters where a lot of shelf space was taken up by the unorganized and by the cheaper imports and new entrants. I think now going forward, if the demand continues to behave the way it is, the 4 listed players, including us, since we reported a 14% volume growth in the sector in quarter 2. So 14 to 17% is kind of possible in terms of demand, which is fantastic, domestic. On the export front, market has been flattish. I don't see an immediate uptick there. But we'll see. We'll continue to monitor. Exports is more, geopolitical, and then there is always a play between volumes and margins. So based on our own requirements, based on how things shape up, we will keep feeding the export markets as well.
That's pretty interesting, Himanshu. Plywood segment, of course, revenues come very less from this segment, but still it has been muted in the last 3 years. Any revival plans for this segment, and by when can we see these benefits actually come into play if there is a revival?
See, for us, ply is a very, very small portion of what we do. It's only 10%. On us, per se, we have not done very well on ply for some quarters, but this quarter has been a respite. So our volumes have grown sequentially by 18%, and prices are where they are, again, holding on. So we'll see. I think, more importantly, between MDF and ply, ply is a sector which has a high base, growing at 6-7%. MDF is growing much, much more on a small base. So I think a lot of joy is there on MDF side, which is our key strength. We're the largest player on MDF, very clearly, with the brand and the legacy, very strong brand legacy that we have. More importantly, I think, there is a capacity which we also have. The others are a little saturated on that front. And there is no meaningful capacity additions happening now here on. Yeah. So I think the overall environment looks pretty robust from a MDF perspective from our point of view. Please do remember that there is a lot of financial discipline that we maintain, which we continue to demonstrate, whether it's working capital or balance sheet. I think all of that should help us do better in the coming quarters.
It's pretty interesting, Himanshu, but some financials related questions also. Forex losses has been plaguing the company and they reported in Q2 as well. Will we see that impact going ahead, especially in Q3 as well, and a lot of depreciation also coming in with euro?
Sharad, see, commenting on a euro dollar is out of scope. Yeah. So if a currency appreciates suddenly in 6 months by 16, 17% in 6 months, yeah, it is, in a way 35% per annum kind of increase, which is unprecedented. Right. So this is beyond scope, but yeah, dollar rupee per se, even if it strengthens, is good for business. Yeah. I do roughly 45-50% of what India exports. More importantly, a strong dollar rupee also in a way insulates us from cheaper imports as an industry. So I think dollar rupee any which way is good. But yeah, euro dollar vagaries are something which are beyond our control right now. Hopefully that should correct as well. I think a lot what is happening is on account of the geopolitical pieces, which I think you know better than me.
Well, yes, geopolitically, there are issues happening and company has major exports also in this segment. But capacity addition is also something which is very keen topic we discussed amongst the investors and stakeholders, and that's for Andhra Pradesh. What are the suggested timelines and it's for this, and any other further capex we can expect in the coming months?
The gestations in our sector are pretty long. Yeah. So you want to start thinking about a new plant. The day you agree that you want to put up a new plant to the day you actually commission, that's a sweet 2.5, 3 years at least. Yeah, nowadays. And then, ramping up takes its own sweet time as well. Today, whatever little I know, there is very little capacity addition coming up from the relevant players. There is something which is coming up in AP, which is Shaw. There is something also which is lined up in MP. But beyond that, there is hardly anything. And these are not very large capacities, right? If they come up, they'll come up 2.5 years hence. And by that time, you are already sold out. Maybe you're planning more.
Well, that's a pretty interesting take coming from Himanshu. But Himanshu, let's have a broader perspective, how to go about it, especially the consumption trends. What are the important consumption trends coming up in the MDF industry? What are you picking up?
See, multiple varieties. I think customers today are kings very clearly. They've always been kings. A lot of focus is on value-added products, which is something that we do as well. So whether it's the high density, water resistant, or the fire retardant varieties, there is a lot which is available to customers nowadays. Yeah. So they look at sustainability, they look at emission norms, they look at everything. And our products with the kind of strength that we are giving, the kind of quality that we are giving, there's a fantastic bouquet of products available. Whether it's our sales team or marketing teams, they keep encouraging customers to come and demand the best possible solutions. And then it is for us to deliver them.
Well, thank you very much, Himanshu, for taking out your time and talking about the important earnings and the outlook going ahead for the company, and also what is plaguing the industry and will there be a turnaround or not. So that's a very interesting take coming in from Himanshu on that. But for our viewers, let's revise the important outlook going ahead for the Greenpanel Industries, and that's pretty much important. First and foremost, the management has also concurred with our important analysis which we have taken, and that is that the industry is going for a turnaround. Industry was earlier getting plagued by two important reasons. First one is, of course, the cheaper Chinese imports coming into the markets in the MDF space. That's the flooding happening of this market, and also looking at the Indian players, the domestic smaller players who have come in the MDF segment, and because of that, the larger players also started losing market share in the unorganized space. So that is something which we will be watching out for. But the question remained is, the company's operating leverage, company's revenue growth. Why is the company coming up with strong guidance going ahead? There's a double-digit strong growth expected for end of FY26 for the revenue, but right now the revenue is on the lower side, as you can see on the screen. And interestingly, if you look at it, EBITDA, that is also a single high digit or a early double digit. That means roughly 7 to 12% of EBITDA guidance is also coming in. That means slowly the company is regaining its market share as well. There were concerns on the balance sheet front also, I'd like to point out, and I'll just explain you one more thing, that the higher borrowings which you are seeing is for its expansion plan in Andhra Pradesh, and currently the company is expecting overall on a blended basis at least 60% plus, you could say, plant utilization coming in. That means if the plant utilization goes for 85-90% in a general atmosphere, then we expect further capex to pick up. So already the company is doing a major capex, so they have stated that they won't be taking any other capex as well. But of course the street will be concerned on the return ratios front, and that is where we are also concerned, and that we had also given a thumbs down to it. Both the ROC numbers and the return on net worth all on the downside. But of course there is a silver lining as well, because the valuations are cheaper. At least if you look at the 5-year numbers, it's at a discount, and that discount itself, it is coming in at, you could say, almost 50 to 70%. Also interestingly, let's point out the share stock price. Nothing much has happened over the last 1 year for the investors, and that's why we had given a thumbs down also to it. But if you are a long-term investor and if you are with the company for 5 years, you had a gain of almost 200% as well. And of course the company's outlook is also something which we'll be looking at. Of course the management key takeaways, will be coming with it slowly and steadily, but let's look at the dealer penetration, how that has also panned out, and they are focusing on the dealer expansion as well. We are reading a couple of broking reports. Let's pull out about the company and let's see how much dealers and distributors they are having, and that itself is also important. Almost 1753 dealers they are having. This also includes the distributors front, and 7 countries are having export exposure. Roughly you could say from India, if an MDF is exported, 40 to 50% of that market share in organized space out of those exports just comes from this company. So a beaten down company, beaten down sector, but will the reversals happen? That is something which we'll be looking out for. But do remember our entire discussion which has happened, 90% of that revenue comes from MDF. Company earlier had exposure in the plywood segment, but that's just roughly 10%. So even if forex losses get impacted, the company has mentioned that there wouldn't be a much problem as such. But you must be wondering, what are the key takeaways of this long discussion which we had? And first and foremost, that's the most important thing coming in, is industry now is out of the woods, the MDF industry. Now this is against the cheap Chinese imports which the management has stated, and that's a very big commentary from the largest player of MDF in India. The full high teen sales growth is expected, and it's possible for FY26, and even EBITDA bump up is there in the guidance. And lastly, no price hikes coming in the MDF and no real pressure also pricing coming in this segment. That means volume growth is improving, pricing pressure is not there. So in future there might be an MDF price hike as well, but currently it wouldn't be there. But let's revise the ratings. Where does the company stand? Income statement, balance sheet, very muted. That's why we are given both thumbs down. Cash flow neutral as compared to its conversion ratios. Return ratios still very dismal. Also shareholding, that's decent. DIs have been lapping up as a value buy. Street trade, not much returns coming in the medium term. Valuations very cheap compared to its 5-year average. And outlook, that is the most important thing, and that company has come up with a very good set of numbers. But net, seeing the past and the present, it is just 3.5 out of it, on the lower side of the KYC ratings we generally give as per our history. Well, that's all for this entire show on KYC. Stay tuned to NDTV Profit.